Well, let's move on then. My colleague Sumita Kareer caught up with Nick Brathwaite, who is of Celesta Capital, based in Silicon Valley, as they talk about their plans to deepen investments in India and how entrepreneurs in India are solving problems for the rest of the world. Listen in.
First things first, Celesta Capital started off with investments into the United States, Israel, China, Japan and India. You have investments worth over $1 billion globally, with 15% locked in India's startup ecosystem, and that too particularly in deep tech, which is about 12% of the startup ecosystem here. So how do you see India as a market for investors, for the VC community, and do you plan to deepen these investments?
But let me start with the last part of the question. We do plan to deepen our investments in India. And let me just clarify one thing. When we started Celesta, we actually started investing in India very early. India was not an afterthought. It's not like we started in the US and Israel and then came to India. We actually started investing in India right around the same time we started investing in the US and in Israel. We started early there, because we've always been big fans of India. Those of us who started the firm have had experience in India and experienced the talent and the opportunities to build big businesses in India. So what has happened recently is that we have ramped up our activities in India, and we intend to even ramp that up further. The attraction to India for us is there's several. One is obviously India is a big market, and in the space that we're in, which is deep tech, we think the Make in India initiative is going to help to spur opportunities for the areas in which we invest. You know, there's a global economic shift that's happening, driven in part by geopolitical concerns, which I think is going to benefit India. And then what we have seen in India is it's rich in talent. And India, many of the entrepreneurs in India are addressing problems that are different from what we see others addressing.
Right, so you say that Make in India will help you deepen and further your investments into the startup ecosystem here. But to what extent? How soon are you looking at deepening these investments? And what do you look for when you look at investing in startups, particularly in deep tech?
Well, so far we've invested in 15 companies in India. We've had 2 exits already. The first investment we made in India was in a semiconductor company there, which we made about 9 years ago. That was exited in about 15 months. It was sold to a strategic, and we just had an IPO. Our intention, we like to say we're doubling down on India, and what that means is that literally we intend to invest in probably another 15 to 25 companies in India over the next few years.
Right. So when you mention deep tech, that actually spreads across verticals like AI, ML, IoT, blockchain, big data and robotics, and even semiconductors, which the Indian government has been really bullish on. And we've seen investments coming from Micron, Applied Materials, and of course, AMD. But speaking of competitive advantage that India has, which you touched upon a little while back, how can India really seize this opportunity of deep tech?
Well, first of all, I think India has built a very good reputation, certainly in software services, but that doesn't mean that the capabilities in India and the talent in India are limited to that. When I was the Chief Technology Officer of Flextronics, we started some hardware businesses in India that turned out to be very successful. We built a very successful set-top box ODM business in India. We developed one of the first ODM layer 2, layer 3 switches at that time out of a team in India. And the semiconductor industry has been in India for a long time. Semiconductor companies have been developing chips in India for decades. And in fact, something like 20% of the semiconductor engineers in the world are actually based in India. So the talent has always been there, in my opinion. I think in the deep tech space, obviously some of the areas you've mentioned make up the main attraction for people in deep tech today. We think about it a little bit differently. We think about, when we invest, there are 3 themes in which we invest as part of our deep tech investment. One is in platforms that we believe are essential to enable mass adoption of emerging technology applications. Another one is in technology that are helping to transform large existing industries. And the third is what we call bioconvergence, which is at the intersection of biotech and high tech. I think of India as a microcosm of the rest of the world. And so if we solve these problems in India, these companies will have the opportunity or the potential to become global leaders, we think, over time.
So you speak very passionately about deep tech and the kind of investments that you're making. But if I were to ask you specifically, aside of, the investments that you've made in the startup ecosystem here in India and elsewhere also, which startups have been of interest to you in particular, not just in deep tech, but in other sectors also, like food tech, fintech, transport tech, and, any other sector that you can think of?
Three of the themes in which we invest, we think there are opportunities in India for very good investments in all of those themes. And the first, which is, technologies that are needed to proliferate, to enable mass adoption of emerging applications. The second one, which is, technologies that are transforming large existing industries or markets. And the third in the bioconvergence. But a lot of our investments are in the second and third categories. And I am excited about the opportunities in India in all three of those categories and all three of those themes. But I particularly am excited about the ones in the second theme, which is the transformation of large existing industries, and in the bioconvergence space. In the bioconvergence space, in particular, because we see the companies in India solving slightly different problems from some of the ones we've seen outside of India, which is many of them are focused on how do you provide access to a large population that may not have access to medical services today. And we think that's a problem that's a very big problem globally.
Right. Let me also ask you about this year has been particularly the year of survival. High interest rates, capital has been expensive. There have been cost cuts and just one unicorn this year due to global economic headwinds. But then India has also been making rapid progress and it's become the third largest ecosystem. But share your key tips for entrepreneurs to wade through these turbulent times and how to create valuable businesses, especially when capital becomes expensive.
But I wouldn't let the fact that you only have one unicorn this year be of a big concern. I think over the last decade or so, valuations have been, some of the valuations we've been seeing in startup companies were not sustainable. To me, it didn't make a lot of sense. Companies were overvalued. And there was an emphasis in many areas on pushing market share acquisition instead of the fundamentals of building a business. So I think that those are gone. And I think as a result of that, of those people becoming more cautious about how they invest in valuations and paying more attention to the fundamentals of building a business, you're not going to see the same number of unicorns showing up. But just because something is not a unicorn doesn't mean it's not a great investment. What you describe as the kind of winter period that we're going through in investments, that is true not just in India, it's true elsewhere. As we're seeing companies, some of the companies being devalued, we're seeing some of the issues in the public markets where the comps are have significantly declined in value. And in many cases, people are now focusing on fundamentals. I think some of the investors, including us, want to make sure that we have enough money to support companies in our existing portfolio and as such have maybe slowed down investments in new companies.